Let's continue the conversation about the inflation that we're seeing in the price of energy. Yesterday, our Western Canadian Select, Alberta's heavy crude, cracking above $100. That's a rare sight. Josh Young, Chief Investment Officer at Bison Interests, joins us now. Josh, so great to have you back on the program. Obviously, the crude trade has been pretty intense over the past couple days, but the fact that Alberta's heavy crude getting above $100, what does this mean for some of the Canadian names that you watch?
Yeah, I mean, it's great news, and it's something that we predicted actually on here a number of months ago, and so it's great to see. It looks like there's plenty of capacity, at least for now, in pipelines, and we're seeing some Alberta producers starting to take advantage of it.
Obviously, the catalyst of the past couple of days, we're seeing the big jump up, whether we're talking about Brent crude, whether we're talking about WTI, we're talking about Western Canadian Select, has been the crisis in Ukraine. But long before this crisis erupted, as you said, we've had discussions on this show where you were saying we're headed this way, whether there's a geopolitical crisis or not. Does that picture still make sense?
Yeah, I mean, we just keep seeing oil inventory draws. And so as inventories fall, it's natural to expect that prices would rise. And I think the one thing that's been surprising is that equity prices actually haven't kept up with oil prices. And I think at this point, it's just a matter of time.
Let's talk about that a little, because there were days when oil was surging higher, like incredible one-day gains of $8, $9 a barrel, hitting highs we haven't seen in years, and yet the energy stocks weren't taking part. Do you think there's some reticence on the part of energy investors to see if this lasts, if it sticks?
Yeah, I mean, I think energy stocks have unfortunately burned generalists and have burned market timers a number of different times over the last number of years. And so I think it's pretty hard to attract meaningful capital. And we're starting to, but as we attract capital, we're also seeing capital flows leave the sector still for ESG divestment and other reasons. And so, I think one thing that we can take away from the tragic events in Eastern Europe is that it's very important to produce more oil and gas here in the US and Canada. And, hopefully there are more capital flows in to help fund that.
You said the word generous there. It made me think of the fact that the energy sector has been awash in cash, and it has been rewarding shareholders recently. With this recent spike up in crude, would you expect that trend to continue throughout the year?
Yeah, I mean, I think it's going to be interesting. On one hand, the larger producers are very committed to returning capital. On the other hand, some of the smaller producers have opportunities to redeploy cash into fields that have been starved of capital, with the opportunity to potentially very rapidly grow in a very capital efficient manner. And so I think we're in a little bit of a bifurcated market where on the small side, there are some great opportunities for producers to create a huge amount of value. And on the larger side, we're going to see, I think, increasing returns, which I think both of these are good for their respective shareholders.
Now, Josh, of course, politicians know that as energy prices continue to surge, that makes them unpopular, that the voter will look to them and say, why are you letting my life get more expensive? So we see in the United States, other nations, the IEA talk about tapping strategic reserves. Didn't seem to make a difference at all.
Yeah, I mean, it's remarkable. I think it's really hard to do short-term energy policy effectively. And I think if you look historically, it's been the case where many SPR draws have led to higher oil prices, not lower. I don't know. I think there's just a lot of misinformation and a lot of unfortunate, ignorance, for lack of a better word, from an energy policy perspective. So I think that's probably playing into energy equity discounts. And, I think there's really just great opportunities here for astute investors to be able to deploy capital and potentially earn really great returns.
All right, you got two names on your mind, then, so let's get into them. Baytex Energy.
Great. Yeah. So Baytex, they're in the camp of paying down debt and returning capital, and they've had some great additional wells in the Clearwater, really strong earnings result. Their stock rocketed up on their earnings and then has started to kind of trail as the whole space has kind of lost a little bit of wind. And, I think for them and for others in that sort of position, just paying down debt and just returning capital should be sufficient over time to build a much more attractive multiple. And then specifically for Baytex, I kind of like names where there's multiple different avenues to win, There's a big upcoming catalyst, which is a potential relisting on the New York Stock Exchange. They got delisted when the stock fell, I think, below $1 during COVID. And so I think there is this opportunity to attract a lot of U.S. capital into that particular name, and that could allow it to outperform in addition to some of the fundamentals.
Right, you got Journey Energy on the mind as well.
Yeah, I mean, so they just raised capital. I didn't participate in the financing because there was some Canada-specific tax advantage stuff there, and they haven't yet shown what they're going to do with the money. But if you do a little math on what their capital efficiency should be, especially because they haven't really spent money on their assets in a while, and then you look at the history of the management team and see how well they did at past companies like NuVista and Bonavista, it seems pretty likely that they deploy that capital and earn a multiple times return on it. And so I think they're one of those smaller names that could really see multiple expansion on growing revenue and growing cash flow. And so I think it's a little different from what people are used to hearing for oil and gas. I don't think it's concerning to the overall macro. I don't think it's concerning to the local basis. And I think it's very promising for the sector as well as, frankly, for energy security.